Okay, what we're going to do for this last segment is actually do some problems inside Connect. So you can, I always think some of the students seem to think they may have understood the material, but then when they get into the Connect, it's maybe they aren't getting it as well as they thought. They don't understand how the system's laid out. So that's kind of what our whole goal here for this last piece. What we're going to usually do in these sections is we're going to come down. Now, again, remember this module 1, for the first one that's due, these are all just pretty generic. These are just, you kind of watch a little video segment and then you answer a question about it. It's how the program is laid out. There's not really a lot of accounting material in this. They use some accounting words, so you got to know some of the things. But what we're going to come down now is down into chapter 1. And we're going to go through this optional practice. Now mine's going to look a little different than yours. So I have to go in here to the student assignment view. And then it still may look a little bit different than yours, but it'll be pretty close. And these are typically set up as algorithms, which means all of our numbers are going to be a little bit different, but it's going to be the same setup. So instead of like cash being, for mine, it may be $100 and on yours, it may be 120, but it's still, everything's going to lay out the same. It's just the numbers may add up differently. That's what kind of the algorithm means. All right, so let's get into this. And usually on some of these, what they'll do is they'll give you a video to watch, perhaps on how to do something. Maybe that's more on the practice ones. But to get started here, I think you hopefully will find these pretty simple. So I'm on the first one. Your first one should look pretty similar to this in this, again, the optional items. And these are going to be very similar to the homework ones. So it's good for us to go through. What we're going to do is just fill in this simple math equation. And this is, remember, the basic accounting equation, the left side assets, and it's got to equal these two. So this should be really easy. Well, 20,000 plus 40,000 or 45 on mine. This has to be, absolutely has to be 65,000. Otherwise, the equation won't work. And then on anything but the homework, you can usually click up here to check my work. And it says, yep, we're doing good. All right, let's return back to the question. 100,000 for the assets equals 34 plus something. So all we've got to do is the simple math and say, okay, 100 minus the 34,000 is what? That has to be what the equity is. 66,000. And we do the same thing over here. It's just the other number is missing. 154 minus 40,000 and 14,000. Check my work. Boom, we got all check marks. So this first one should be really easy, the first set. It's making sure your equation balances, because that's really important in accounting. Now this one, you think, oh, they don't give us nearly as many numbers. Well, that's okay. We can still do this one. We can start filling it in. Because down here, it's just totals, down here at the bottom. So really, they are giving us the same amount of numbers. If I have beginning assets of 300, equals something plus my equity of 100. On my example, this one has to be 200,000 because 200 plus 100 is going to equal 300. And then it says, okay, throughout the year, I gained an extra 80,000 in assets. I gained an extra 50,000 in liabilities. So that means how much equity did I have to gain? And at least on mine, it doesn't allow me to, oh yeah, it does. It allows me to fill it in here. Has to, because 50 plus 30 has to equal 80. And then all you got to do down here at the bottom is just simply add up. Beginning plus your change says we have 380,000. We have 250,000 of liabilities. And then equity, 130. And then these down here will, of course, balance as well. 250 plus 130. You add those up. Yep, that equals a 380. Always check your work to make sure. Again, you do the check work on a lot of the problems except the final homework problem. Okay, now our final couple questions here deal with the financial statements. All right, let's look at what they've given us. It says the owner contributed $84,000 in exchange for common stock in the business. So this is a brand new company. It just started up on October 3rd, and then these are the balances on October 31. So these were all zeros at the beginning of the month. And you can see here's that 84,000, and then it's spread out through different ways. And we've got some new, you can see we've got, he looks like he's a consulting firm. He's got consulting revenue, just like if it was like a doctor's office or a lawyer's office. Think of this as like as your trial balance. It's just not laid out and all in one big long thing. It's put into two things. That's fine. You're going to see that the trial balance is the better way to do it. But these are just all of our accounts, and they actually were nice enough to put them in kind of the equation order for us. Notice here the first items are everything over here is all of our assets, cash all the way down to the equipment. And then we only have one liability. We have two owners' equity, the stock and the dividends. And then we have our revenue and then all of our expenses. With that, we should be able to begin to prepare the three financial statements that we've done. Plus, at the very end, we're going to do the last one, the statement of cash flows, which is a little bit tougher. And we're going to get way more detail into it at the end of the semester, but we're going to look at the bare bones one today. All right, so the income statement, remember that first thing? We always have the company name, what it is we're working on, and then as of October 31, or whatever the year is. So that's what we're going to pick here, as of October 31. Okay, now we come here. Let's see what the first drop down is. All right, remember what the first category, remember it's revenue. We start off with our revenue account in our income statement. That's the top. That's kind of our heading. And then it says, okay, well, what revenues could go in here? Notice they give us a whole bunch of, they gave us three options. Well, if we look back up here at the problem, we only need one, consulting revenue. So the rest of them we're just going to leave blank. So we go to consulting revenue, find it in the drop down of alphabetical order, and then put in the amount, 14,000. Then notice we put that in the subtotal column, and it brings it down here and adds it for us into the total. So I don't have these written out. I think you can print these out. Yeah, you can print these if you want, but we've got to mentally, for at least now, put a little X here that we've done the revenue. If it helps, print it out, and then you can manually put an X there on the consulting revenue. Well, that's the only revenue we have. We're ready for the next piece, the expenses. So we come to my drop down. Go to the expenses. And then we start listing them. All right, let's just put them in the order that they have them. You don't necessarily have to on the expenses, but I think that's going to be best for us. So let's do rent. $3,500, $3,550 on mine. Yours, all your amounts will probably be just a little different. And for those last few blanks, we just leave them blank because we don't have any more expenses. Now this company's doing okay, maybe not great, but at least our revenues are more than our expenses. Now we're ready for that final line. Revenues minus expenses. If you look back to your notes, remember that equals your net income. And they give us two options here, net income or net loss. It's only a loss when your expenses are more than your revenue. So in this case, they're not, which is good. At least on my example, maybe on yours it is different. But we can just do the math here, 14,000 minus 11,890. And we get 2110. We can check our work. Everything looks good. All right, so now we've done the income statement. All of these, consulting, rent, salaries, they all have X's. They're done. Now, the one thing that you need to jot down on a side sheet or just keep it in your calculator like I have, let's pull back up my calculator. This was our net income. Remember on the statement of retained earnings, we use the net income. If we go back to my, I don't know if I have it up right. But anyway, when we do our statement of retained earnings, remember I got to use my net income as part of my statement of retained earnings. So I'm going to need to remember this 2110. That's one of my connecting figures. All right, so the first thing we do here is our date. And then the statement of retained earnings, hopefully if you have these, you've written these out, what it looks like. Remember the first thing is your, on this one, we don't have any opening retained earnings. So our retained earnings starts out as 0 because it's a brand new company. With a brand new company, you haven't earned anything yet, so it's just 0. Okay, then we add in our net income. So that's our connecting piece now. This is where we put in that 2110. And then we subtract out our dividends. Come up here and we see the dividends for 2,000. That doesn't leave us much money left to go into retained earnings. We only made 2110, we took out 2,000. So that tells us then our ending retained earnings at the end of the month is just the difference. It's the 2110 that we earned in income minus what we took out. So we're down to $110. That's the new number that I want to remember. This 110, that's going to be our connecting piece into the balance sheet. We can go ahead and check our work. Looks good. Now we're ready for the balance sheet. This one, for most things, you don't use as of, but in this one, they still use the as of, but they just take out the month ended because they're saying at October 31 only, not just for the month. So that's the difference between the balance sheet and the other two. The balance sheet is looking at it just not for the month, but for the entire life of the business. Okay, and just by looks of things, it looks like they don't break it down like we did in our problem with current and non-current. So we're just going to have regular good old assets and then list them all. Remember, that's what our balance sheet is. We have our assets and we list them all, and then we list our liabilities and then our owner's equity. Okay, so let's go through and list our assets. We've got 1, 2, 3, 4. We got 5 assets that we need to put in here. So let's go ahead and do that. Got cash. That's our first one. $11,360. Next one, we've got the accounts receivable. Office supplies is our third one. And then our last two are long-term ones, land and office equipment. We don't want to put anything in these last two because we're all out of assets. So we're going to leave those blank. And then this is simply our total assets. Okay, now we're ready for the other side, like we did in my example, how I had it on two sides. You don't have to do that, but on this one, they do it just like that. So now we're ready for our liabilities. And we only have one. The accounts payable, what I owe somebody, $8,500. Don't put anything in the second one. Except I guess we could put, let's see what they give us as drop down. If they give us total liabilities. No, they don't. So we don't need to put anything there. Now here we're ready to start a new category. We're all out of, so on this one, what they're not totaling up your liabilities. They're going to do that all at the bottom. I usually like to total your liabilities, but that's not how this problem is set up. Now we're ready for our two equity items. So we've got X's by, we've used the dividends, we've used all of the revenue and expenses, we've used all of these. The only thing we haven't used, there's two things, the common stock and then our connecting figure. Remember that retained earnings ending 110 that I have saved out here? Those are our last two items we're going to put in. So let's go ahead and put in our common stock. That was the 84,000. And then our retained earnings at the end of the year. And we don't, it was 0, but now it's at 110. I guess the reason they didn't add up and give total liabilities was because we only had one. Here they are giving us a total equity, so we want to go ahead and fill that in. Total owner's equity is the 84,110. And then this number, remember that check figure? It's our liabilities plus our equity. And boom, total liabilities and equity. Check our work. Everything